All right, now on this podcast, we tend to bemoan the many hoops Aussie savers often have to jump through these days just to earn a decent rate of interest on their hard-earned savings. I'm referring, of course, to those bonus or conditional savings account products that can offer higher rates of interest, but only if you meet certain conditions every month, such as making deposits, growing your balance, making a set number of transactions through a linked account, or even all three. And you know what? Many savers are sick of them, especially given how many of us are regularly failing to meet those conditions and losing out on interest income because of it. But one bank that's receiving a fair bit of praise from Aussie savers for offering competitive rates for savers and relatively few hoops, if any, is Macquarie Bank. And I'm pleased to say we're joined by Macquarie Bank's Head of Payments and Deposits, Olivia McArdle. G'day, Olivia. Welcome to the Savings Tip Jar.
Thanks for having me, Dom.
Thanks for joining us, Olivia. As a fellow Macquarie customer, I'm keen to launch into this chat. But before we do you have a savings tip for us?
Well, thanks for your business, Harrison. We appreciate your support. I absolutely do have a tip. I am known to track my expenses. So I am an accountant from way back, and I've been tracking my expenses for probably 20 years now. But my favourite one of late is around subscriptions. I'm sure we've all been caught by, that subscription that the first 7 days is a free trial, and then we forget to go back and turn it off after we've watched that movie or, binge that series. And same for those ones that are like $2 for 6 months, and then they go up to like $30 a month or something like that. So I'm a big fan of always reviewing your expenses and your subscriptions and really culling them until someone else in the household screams when you've turned off their favourite podcast or subscription.
No, that's what, Olivia. Yeah, it's always great to hear from a fellow meticulous tracker of expenses. Just about every week, I'm in my own little spreadsheet, writing down the major expenses I've performed that week, as well as tracking the general wealth growth movement. So totally agree with you on that one there. Okay, so just getting into the meaty stuff now. As I sort of touched on in that big intro there, Macquarie has this pretty hoop-free approach to savings account interest. Can you just talk us through that?
Yeah, absolutely. So we have our transaction and savings account product, which you'll hear us talk about with no hoops and catches. So it has no monthly conditions, no fees, and no, as you said, balance restrictions. We don't require you to make a deposit or the balance to go up. We think that, every day Australians are super busy. We've got lives that we're living and we just can't be keeping up with all of those conditions and things. And so our product is meant for you. There's no minimum balance, no account fees, and no other conditions required to unlock those great interest rates that we pay. The other thing to note, I think you mentioned it as well, we actually pay interest on the transaction account. So ours is a transaction account, which is, like your everyday that you get your salary, you pay your bills, all that sort of stuff, as well as having no conditions on our savings account. And that's the other thing, the sad thing that we see out there in market, that so many people are using transaction accounts that get zero interest, and even on top of that, someone might charge them a fee. So they're actually earning negative interest by the time you've taken into account that fee. So we're really passionate about the no hoops and catches on our product.
Yeah, it's a pretty handy offering you guys have, especially, if you're moving away from one of the bigger banks, where, as you said, you might be facing a fee. There's other benefits such as foreign transaction fees, so on. The app's pretty good coming from a personal Macquarie customer as well. What's the sort of general profile of customer who's coming to the bank, say, the past couple of years, looking for that hoop-free interest? Because I feel like from our perspective as a financial comparison site, we're seeing customers more and more fed up with having to jump through like 11,000 hoops every month to get that interest. Is that something that resonates with your customer base?
Yeah, exactly. For us, our customer is anyone who's happy to bank digitally. We don't have a branch presence, we don't have anything like that, but you don't need it. Like, you can open our account in a couple of minutes. It can all be done online. And as long as you're happy to bank digitally, it's not like a particular age bracket or, profession or anything like that. And then to the conditions, that's really broadened out the people who are coming to us, because a lot of people have been trying to save. Everyone's learnt the bucketing strategy. We've all been taught, yep, get your bucket for your holiday, the school fees, all that. So we've done that. And then, then there's been these conditions put on top of it that it's just not possible for us to meet. We all saw the ACCC report, I think late 2023, where they were saying over 70% of people are not meeting their conditions. And we're just seeing people that are just sick of it and saying, I can't be tracking this on top of everything else I'm doing in life. Can you just give me a good rate, as you say, a great digital experience, and I'll just come across to you.
Now, Olivia, Macquarie has an old nickname, the Millionaires Factory, and I guess that kind of rings true to some extent with this recent move that you guys made to increase the deposit tier for your max interest rate from $1 million to $2 million. Can you just explain what the thinking was behind that?
Yeah, we did make that change to increase from 1 mil to 2 mil. Frankly, we just wanted to remove yet another barrier to unlocking that great interest rate and having the no hoops and catches. We are seeing, there might be customers out there that have been saving for a house. We know that house prices are going up. Some people are having to save for longer. You might have been lucky enough to get an inheritance. You might have sold a business, something like that, where, just for a point in time, you will actually have a bit more money to save. And we just wanted to remove another barrier and just make it easier for people to get access to what we were offering.
For sure. Now, like a lot of people, there's a lot of inertia in Australian banking. They sign up to a bank when they're 14 or they get their first job, or they might have been, part of school banking or whatever, and they stick with that bank for life. But it seems like in the last few years, Macquarie's really made strides to try and break customers away from that kind of psyche. And, you guys have got billboards now, there's TV adverts, whereas, 10, 15 years ago, Macquarie was like a relatively obscure, investment bank. What's behind that sort of strategy to really grow the consumer base?
I think there's a couple of points that you mentioned there where we wanted to really reach out to that retail banking base and offer them that digital experience that we had invested in. Our early days were around that cash management account where we had specialised, and we still do, people with self-managed super funds who had an advisor, that sort of that area. And we said, well, we're offering this experience here. Why don't we go broader into that everyday banking experience? Now, you're saying about that inertia, and it is hard. I think most people, as you say, you get that bank account with your first job, and you're working at wherever, and you get that first bank account. The next time you're probably likely to change is some large life event. You could be getting married, getting divorced, all those kinds of things that happen in life, and that's probably the next point that a bank account change used to happen at. Whereas we found then the investment we've made in that digital account opening has meant that it's so much more easier. I don't have to go into a branch. I don't have to deal with all of that stuff. I can just sort of do it on the bus, going to work or going home. And that's kind of, I think, brought it to the fore with people saying, oh, hang on, this is easy. I'll just move things. And I think nowadays we're more likely to be multi-banked and have just different bank accounts for different things rather than just have one bank account that I use for everything. And I just think our digital experience has helped really unlock that for everyone. And then you add to it the conditions where you are saving for that holiday or, those new shoes or whatever it is. And you look in your account and you're like, oh, well, I've got that higher rate. And you think, oh, what happened there? I realised I had to pay that bill, and you've lost the rate for the year kind of thing. And I think people are just tired of that.
Yeah, I can certainly relate to that inertia to some extent. Just, the bank account I opened when I was a teenager, I kind of stuck with through until my sort of almost my mid-20s when I started working in finance. And then I sort of realised, hang on, this is a transaction account and I've got all my savings in it earning next to nothing in interest. Wow, I could actually put my money in a savings account, earn interest for doing nothing other than just having the money sat somewhere else. So I was kind of just like, I couldn't believe what I was, why didn't anyone tell me about this until, I had to figure it out for myself. But on a slightly different topic, I mean, what you mentioned a little bit before there, self-managed super funds, something we get asked about a bit from time to time is, people obviously they want this Macquarie savings account product that offers a good rate with very few conditions, if any. But they find that they're not they can't use it within their SMSF. Is there a particular reason why SMSFs can't use this product?
We do have, as I was saying, we do have the cash management account, which is available for our SMSFs. It is a more complex entity type, and therefore you have to allow other offerings as part of that onboarding. And so that's why we go through our cash management account. All SMSFs will have a trust deed, so we need to get a copy of that trust deed. We need to go through who the beneficial owners are for the SMSF, and so that's why they have to come through a different structure. But again, you can do it all online. It's all available digitally, and opened within a couple of minutes.
Yeah, for sure. SMSF's a very complex product. Hats off to anyone who wants to manage their own super. Just finally, Olivia, where do you see the sort of deposit market going in the next 3 to 5 years? We saw that ACCC deposit inquiry a couple of years ago saying 7 in 10 people don't meet the hoops on their savings account. They're not actually earning the top interest rate. Do you reckon the competition regulator will do anything about that? Are they going to clamp down on banks doing that? Where do you see people's money going in the next few years or so?
Yeah, I mean, I think we're still waiting to see the next steps from that report that came out in late 2023. That definitely were demanding transparency, and I think, for us, we're very open with our customers. When they're coming to the end of that welcome rate, we let them know, and I think that's the thing that the industry as a whole will have to become a lot more active with their customers. Where maybe you haven't met that condition for the month, if you keep doing X, Y, Z behaviour, you're not going to unlock that rate. That definitely seemed to be where the report was going. I just think for us, all we can do is continue to make it as simple as possible as we can for customers, and just not have any of those hoops and catches in the first place.
Yeah, it seems to be working out pretty well for you guys so far, just judging by all the praise you're getting from consumers and business people alike. Olivia McArdle, really appreciate your time on the Savings Tip Show podcast. Thanks for joining us.
Thanks for having me.
Thank you.
Okay.